What if I told you that you could control 2 cash flowing assets in a recession-proof market for the price of 1 negative cash flowing property in Austin, Texas? Today, I'm going to break down the math for you guys. We're gonna get into the pricing, the rents, the appreciation, and then the monthly bleed. I hope y'all enjoy this video. Let's get into it. Let's just start with the most simple numbers first. It's price to rent ratio. These are average statistics. Listen, I don't know anybody who would pay $300,000 for an investment property in Temple for a single family, but we're gonna go off of the median or average for each market and kind of dive into the numbers. So a $300,000 home in Temple will rent for $1,800 a month. This, I would never advise somebody to do that. There's much better deals in Temple, I know. I'm sure in Austin as well. But the average in Austin is a $450,000 home that rents for $2,200 a month. So you're paying, 50% more, but you're only getting 20% more rent per month. So, you're already definitely on the month to month. You're gonna have much better cash flow in the Temple, Texas market whenever you go price to rent ratio, obviously. But that's also something like that I think especially a newer investor is gonna want to take into account, because not only are you taking a huge hit on the down payment with the entry point in Austin, but now you're probably going to be contributing money every single month to this investment property, and you have to bank on the appreciation. There's no backup plan. I mean, if it doesn't appreciate, you're going to not only lose a lot of money, but also you're gonna be, it's like having a car payment, you're gonna have to pay every single month. So, and then, which leads me to like, how I analyze investment property is that I want to see at least some sort of return that I can see, So if, let's say I'm only making $100 a month in cash flow on a property in Temple, well, that's $1,200 a year. And if I put $12,000 down, we'll say for easy math, I'm getting a decent return. It was a 10% return. So you have at least a return on your income. Whereas in Austin, you're not gonna see a return on your income until you sell it. Now you're not equating for what if something bad happens and you have to sell for another reason, or what if this. Temple, if something bad happens, well, at least you had maybe 20% return on your investment. So it's a lot safer play to invest in a cash flowing asset rather than in an asset that you're paying cash every month to keep. Listen, so we're gonna go into why you would invest in each one and kind of what specific pros and cons each one has. Temple is going to be, there's a stable job market here. You have Baylor Scott and White. It's one of the biggest hospitals in Texas, number 11. So you have a lot of medical workers here, hospital workers. And that is number one, the best tenant I think you can ever have. And number two, it's a very stable, economy here that's actually growing. So one of the other things that I like about Temple is that, there is a lot of space for growth here, and Temple is actively growing. You're investing in a market that is growing, whereas Austin is more like, Austin, honestly, I think is full. I don't know the statistics, but Austin is packed, and you have kind of spillover to, Georgetown, Round Rock. But also, it's a possibility, I don't think this, but it is a possibility that you'll have spillover up here in Temple, and that then you'll start really seeing a huge increase on the appreciation as well. There's also a Meta data center. It's only like 33 jobs, but these are high quality jobs. And then it's a $700 million project. So that's a long time, and that's gonna be a lot of, construction workers, people who are getting this data center built. So who is kind of the tenant? So in Temple, you're gonna have obviously a nurse or medical worker. In Austin, you're gonna have kind of the techie person. And I think that the nurses are great tenants. I think probably techie people or that kind of class who lives in Austin is going to be possibly a little bit better just because of the price. So my theory is that if you have a really low, like in Killeen, for example, those quadplexes are running for like $600 a month. So now you're going to get somebody who can afford $600 a month living in it, which I'm not going to say if that's good or bad, but you know, that's just what it is. Whereas if you have somebody paying $2,200 a month, they have to be able to afford it. So it's a different type of person. So you know what I mean? I don't know if I can even say stuff like that, but let's just keep going. So that's the target tenant, I guess. Both of them really have the kind of creative strategy where you don't have to do a long-term rental. You can create more monthly income from the property by doing a mid-term rental or a short-term rental. You're definitely gonna have a lot more opportunity for a short-term rental in Austin. But for somebody who wants an investment property where you're not going to have to be really involved, I think midterm rental is a great strategy, and I honestly think there's the same opportunity here as in Austin. You know, you're going to have a little bit lower price point, obviously, but these midterm rentals are doing very well. They're renting, you know, there's no vacancy, and you're getting, you know, 50% more net than what you would get as a long-term rental. So that's even more cash flow, and it doesn't equate to work done. You know, it's still easy. You're not going to have that much tenant turnover. These are longer stays. So that's something to keep in mind as well. All right, so my honest review, and you know, I think if you want to invest in Austin, I think you should. And if you want to go into Temple, I think you should. I'm not biased towards either market. I like Temple because that's where I'm at. You know, if I needed a tax write-off and wanted appreciation, I'd probably go for Austin, honestly. So the pros for Austin is that you're going to get appreciation. You know, when the market is up, you know, you're going to have a better upside than Temple or Killeen. It's slightly more liquid, so you can kind of move these properties faster because there's more demand in the Austin area and there's more people in general. And you know, you're in Austin, so it's cool. Austin is a great area. You know, I don't think it would sway me, the location at all, but some people like to say, oh yeah, I have a house in Austin. So maybe that's a pro. But the cons are, the biggest con in my opinion is the negative cash flow. It's so hard to find a cash flowing property in Austin. And if you do, you're probably gonna have to have a lot of risk, you know, on the buy side, because it just doesn't happen as often in Austin. The other thing is that also has to do with the cash flow is that the taxes are actually a little bit lower than Temple. They're 1.95%, whereas Temple is 2.2. But that 1.95%, that's on the average of like $450,000. So that's a huge tax bill, which is gonna eat into your cash flow even more. And then obviously there's a lot higher competition. So you can maybe buy a deal here, like honestly, you can buy a deal around 80%, 85% on the market. You get a good cash flowing asset. Whereas if you get, you're gonna have to pay higher than the 80% because of in Austin, because there's so much competition there. And then the fourth one is just getting a property in Austin. I mean, it's hard because for just a normal property, you gotta have almost 100,000 saved up, which for the normal person is not feasible, you know, who's just now getting into real estate, or maybe not really even feasible, even if you've been in real estate for a while. Austin is a very specific investor market. You have to be a certain person to invest in Austin, and even to want to invest in Austin, to where it would even give you any benefits to invest in Austin. All right, so Temple, the pros. The number one is gonna be the cash flow. You're gonna have better cash flow, much better than in Austin. And then your entry point is gonna be a lot lower. You know, you can buy an investment property here for $180,000 and that's for everybody. You know, everybody can buy one. If you're willing to do a little bit of work or have contractors, you're willing to buy something that needs some work, you know, you can get in for a significantly lower, and that's gonna even increase the cash on cash return. And while it's not as liquid as Austin, you're investing in a stable market. You know, you're not going to take a huge loss on anything here. If you work with me at least, and you buy it right and you don't get a bad location, you know, you have good numbers to begin with. But the cons are gonna be, you're definitely not gonna get close to the appreciation that you're gonna get in Austin. And then there's also, it's not as liquid. So the homes are sitting for, you know, an average of 100, 115 days on the market here in Temple. So if you do have to sell, you know, you have to factor that in. That's not very liquid at all. All right, so for the conclusion, here's what I think. If you want to get rich and you want to do it in a safe, efficient manner by buying rental properties, you know, that is going to be Temple, Texas, because you're not paying every month to own the property. The rent will be paid by the tenant, all of it, and you're probably going to even make some every single month. And then if, number one, if you want the tax write-off, if you have a high income job and you want the tax write-off and to sell it later down the line and then see the gains from the investment, Austin is going to be a better choice. And then also if you're like, you have like a risky, you know, side and you just want to kind of bet on the next boom, that Austin is going to be the place, because there's a lot higher potential for the booms whenever you invest in Austin rather than Temple, because it's the lower entry point. So if you do 500,000 versus 250,000, you're going to have more money, obviously appreciating with the 500,000 one. So that's what I think. I think both are good markets depending on the type of person you are. Listen, I'm gonna get y'all set up. You can download an investor calculator down below. I hope y'all enjoyed this video. Listen, if you are interested in investing in Texas in general, please reach out to me. I work with a lot of investors. I'm helping investors grow their portfolio every single day. Even if you don't want a real estate agent or don't want Temple, please reach out to me. I hope to hear from you guys. You can call me, text me, email me. I hope you enjoyed this video. Let's get it.